course, it's been a while since we released a video, so we thought it was about time to introduce y'all to another one of our custom PineScript strategies and indicators for Tradingview. We'll call this part 3. We recently released a new strategy for our subscribers, and we thought we would make a video about it. So right off the bat, don't be fooled by this P&L here, right? Because a lot of things go into that, and one of the biggest things is how long you've been using the system and what your risk is and your account size and all of that, right? This is all super conservative and over a very short amount of time. And when I'm talking about time, I'm talking about a couple things, right? So you can see this is on the 30-second chart, right? But we're not trading 300 times a day, right? Like each one of these lines, right, they represent whole different days, right? On the this is on the S&P 500 or the SPY, and so it's making like one trade per day, or sometimes a little bit more, sometimes a little bit less. On the 30-second chart, right? We can look at this. So, average bars in trade. So, you think about it, right? The stock market is open for 6.5 hours a trading day during official market hours, right? And times 60 minutes. That's 390 minutes in a trading day, and this particular example of this strategy is on 30 seconds, so times 2, and that's 780 bars in a trading period or trading day that the market's open, right? And so the average number of bars in trades is about 1,000. So the average is a little bit more than one day. On the long side, you can see it's a little over 1,000. On the short side, it's a little under 1,000, right? And then you can see the breakdown on the average bars in winning and losing trades. Winning trades, both short and long, and losing trades, both short and long. Right, and you can see a whole lot of other statistics about this. And time frame matters, right? Like, so how long? These numbers, what are these based off of, right? So it's based off of a $10,000 account, right? with zero pyramid, which means no dollar cost average. You can do that, and we'll show you what that ends up doing. But for now, this is set at 0 DCA, and we set the commission at 1 USD per contract, because for this, in this particular use case of this strategy, trading the SPY, we use options, right? And so generally per contract, options contract, we're paying about a $1 commission to both buy and sell that contract, right? So hopefully y'all understand that, and I don't have to educate y'all what I'm talking about. Same thing with the profit factor and percent profitable, right? Like, it's all relative. So this strategy has executed 17 trades with 70% profitable and a profit factor of 3.3. And under these settings has made a total of $34, right? That might sound like chump change, right? But you gotta keep it all in perspective and what you're working with and what you're dealing with. And we can see how long these, or over what set of data these numbers were generated on. And we can see that by the list of trades. So if you look at the data set, this is going back only to February 27th. Today is March 29th, 2025. The market closed for the week yesterday on the 28th, and this had its last trade on yesterday on the 28th, and these numbers right here in the overview and the performance and trade analysis and all that, they're based off of this time period that it's collected this data. And I go back as far as I can with all of myself, and we always also implement deep back testing. If you don't know what that is, that's what that is. So what does this actually do, right? You can see on this, at least over this time period right now, we've obviously suffered a significant loss on the market, and the strategy has underperformed on the long side compared to the short, which would be to expected. And you can see the average P&L per trade on the long side is 47 cents. And over the last month, the average P&L on this strategy is on the short side $4.15. Right? So that doesn't sound like a lot, right? But again, we trade options. So what does that mean and translate into? So here was the last trade. Or the last two, you know. So this basically it went long here, right? And lost a little bit of money there. And then went short. So on the spot, it went short at, let's call it 569, and exited the short at 563. It's a little less than that, but so that's about a $6 move. And if you pull up the options contract, so where did this go short? Right, this was at, and if you remember from some of my previous videos, it's probably just a setting I need to change in Webull, but these option contract charts are set on Eastern Standard Time, and this chart with Tradingview is on Central. So this chart is about an hour behind this chart. Right, so and there's the Webull desktop app. But anyways, so at 13:55 ish, right, which is where this entered the trade. We can zoom in even closer if we want, right? So there it is. Actually 13:52:30. So this went short, and we like to mitigate theta because we're purchasing these options contracts as opposed to selling them, in which case you'd be wanting to maximize theta, right? I'm not gonna get into the details of options Greeks or anything like that, but this isn't a beginner level course, so if you don't know what I'm talking about, you need to do some research and educate yourself. I'm just showcasing what this strategy does and part of how we implement and utilize it. So at 13:52:53, whatever you want to call it, Central Standard Time on Thursday, March 27th, 2025. So on the Webull chart here, that is 14:50 or 52, something right around there. So this option contract was going for 314. When this exited the trade, so this was next morning at 9:07 Central, which would be 10:07 on Weeble time. So let's look at that.
You'll never have the sacred stone.
5:03. The thing about it is, if you're actually dollar cost averaging this, let's just set this to 100 because it never reaches that number of contracts, but just to make it essentially unlimited, right? You can see what it does. On a $10,000 account, at $627, and it captured about 6.3% on its account size in about a month. I mean, just think about that, right? A lot of money managers, banks, and whatever would love to offer their customers, their clients, a 6% savings rate, interest rate on their savings, right? Per year. And this is in a month. That's trading with EMCS.